Good morning, everybody. Thank you for being here. I really appreciate it. My name is Deborah Dickerson, and I am a business coach at the North Idaho Small Business Development Center, and I really appreciate you being here. I will probably call the Small Business Development Center the SBDC as we go along today. I am an acronym person, and I try and be responsible in the use of my acronyms. So I'm going to share my screen here as we get started. And hope everybody can see it. I think you can. And so I really appreciate you all being here. Hold on a minute. I got to get a little bit of something set up here so I can see things. Good. There they are. All right. So this morning, we're going to talk about how to improve your profit in difficult times. And I want to own something about that. I realized as I was working on it that I'm going to tell you how to improve your profit during any time, and in particular during difficult times. But all of what I'm going to talk about today will improve your profit at any time. So, before we get started, as I said, I'm a business coach for the Small Business Development Center. And the North Idaho Small Business Development Center is located at the North Idaho College campus in Coeur d'Alene. And while that's where our main office is, I'm actually located here in Sandpoint, and I focus on my area of Bonner County. But we have coaches that are located in Coeur d'Alene, and we also have one located in Boundary County up in Bonners Ferry. So we cover all of the 5 counties of North Idaho. And just so you know a little bit about me, I've been a small business owner and have worked with business owners for many years. Particularly in the area of digital marketing and just overall business. So, and we're a center, our center is one of a national SBDC network. All right. Oh, and the other thing is, and Jacqueline has already used the chat. I hope you all know how to use the chat and you all know how to raise your hand. So given that we've been in this Zoom environment for a long time at this point. So I want to talk a little bit about the SBDC. So we are here to accelerate your business success. That is our only reason and our only purpose is to do that. And we love doing that with business owners, primarily through one-on-one business coaching. And at the end of this, I'll give a little bit more detail and tell you where you can go and register and make an appointment with us. And we also do these trainings, which are at no cost, and also the coaching is at no cost. We're funded by a number of sources, one of which is the SBA, the Small Business Administration, as well as the state and NIC. And we also connect you with a variety of different resources that, you know, we just know like what banks might be loaning in your in the business area that you want to go into business or expand businesses. You know, we know about if we have access to resources that focus on government contracting. So there's just a world of resources that we're connected in with. And so that's kind of the third leg of our chair in the way that we accelerate your business success. So what are we going to do here today? As I said, we're going to talk about how to increase your profit in difficult times. And so I'm going to go through a number of different strategies. And I really like it when you all participate. It really makes a difference for me. And I think it also keeps me from being just a talking head, I hope. So I'd like to find out what you think your strategies are for increasing profit in your business. And you are able to unmute yourself and speak, or you can put it into the Skype chat. So I'm just curious, what's your go-to strategy for increasing your profit? Marketing. Okay, good. I like that. I'm going to talk a little bit about that, Heidi. Great. Thank you. Social media advertising. Okay, that's great. Good. So marketing are the two that I see. All right. Awesome. Thank you. Did someone just unmute? Do you have something to say? Okay. That's great. Oh, and I'm happy to see that you're not pointing at increasing your sales, which is the main thing that a lot of business owners tend to focus on. If I just increase my sales, my business will be great. And we're going to talk a little bit about that increasing your sales may or may not increase your profit. A lot of businesses that expand quickly end up losing money because they're not keeping an eye on that. All right, so here's the strategies that we're going to talk about today. How are your financials doing? Do you know your current financials? Increasing customer retention, cultivating customer referrals, having a strong online presence. Growing your average order size is a great way to increase your profit. And then we'll get to the more standard ones of managing pricing and sales, increasing sales. What do you do with pricing to maybe that could impact profit? So those are the different areas that we're going to talk about, and we're going to go through each one. And so the first one, and I do think this is the foundation. This, for me, this is the most important. When I start working with clients, this is where I start. And it's basic, right? Do you know your current financials? So as I talk here, I'd like to know a little bit about what you do financially for your business. Do you keep an eye on your financials? Have you implemented an accounting system? If you have, which one? So if you could put that in the Skype chat as I continue to talk, not Skype, sorry, into the chat, I'd appreciate it, and I'll make sure I check on them. So current financials, do you know what your sales are, what your gross margin is, your net income through the end of September? Are you present to that? You know, we're heading into the last quarter of the year. So it's a great time to evaluate how you've been doing this year and get yourself powerfully set up in the last quarter, because this is it. Like whatever you're going to do in 2021, you got now under less than 3 months left. So how's your net income percentage this year versus last year? Do you have a regular practice of reviewing your financials and what that is? And then, you know, there's 3 basic financial statements to pay attention to. There's a lot of different things you can pay attention to. I'm just going to point out 3 of them. So the first one, and I want to say that this is the most important. It's the one that changes a lot over time and or at a short period of time. So that's why I tend to focus on that. The profit and loss statement. So it shows your gross sales, what your cost of goods sold is, your gross margin, your overhead expenses, and then finally that all important number of your net income or your net profit. And so that's kind of where I start with a lot of my clients. And then your balance sheet. So that looks at your assets, your liabilities, and then how much of an investment you have in the company. And that's really important because that's where you see your debt. You actually don't see debt on your profit and loss statement. That will just show what on your profit and loss, you'll show what you're paying in interest, but you won't actually show your debt. So that's what makes your balance sheet important, is to show what your debt is relative to your assets. And then finally, and a lot of companies don't focus on this one too, and I think it's a really important one, is how's your cash flow, right? Do you have cash in the bank? Or are you constantly bulking up your checking account, right? Do you have cash? And I think that's really important. And I think particularly if you're a growing business, that's where a lot of businesses get caught. They take on some debt to maybe do some expansion in their business. And all of a sudden in that debt payment, they don't have a good cash flow. They're stressed out. I had a client show up to me last year, and they were having a cash flow issue. They had grown their business. They had expanded their business into a new site that was much bigger than their old site, which meant that it was also more expensive. So their rent had increased dramatically, and they had extended their line of credit fully. And in that, all of a sudden, they had no cash on hand. And And focusing on that, what we discovered was they were a contractor and they weren't taking in their deposits in a time frame that allowed them to buy the supplies that they needed. And we got that in alignment, and all of a sudden there's breathing space because they were profitable. And that's what was interesting, is they were profitable, but their cash flow was weak. And, you know, we worked our way through that over a period of 3 to 6 months. Do you have an accountant? Do you have an advisor who's an expert in this area? You know, we're good. Us business coaches, we're good. We can look at that profit and loss. We can look at that balance sheet, but we're not accountants. We're not CPAs. And even if we were, we wouldn't be working with you in that capacity. We come alongside you and work with you, and we provide general business expertise, but we are not accountants. So it's great to have an accountant. Let's see. Heidi says that she uses QuickBooks. Great. So I'm just curious how often you look at your financials. You know, a lot of business owners that I start working with, they don't have any real accounting system. They save their receipts, and at the end of the year, they give them to their accountant. And the in the beginning of the next year, they actually know whether or not they made any income. So what that does is it doesn't give you any power during the year to actually know where you're at as far as profit and loss goes. So I highly recommend that you implement some type of accounting system, whether that's QuickBooks. There's also a nice one out there called Wave that doesn't cost you anything until you have payroll. And so I recommend that to my clients. QuickBooks is the one that accountants love. It's the one that they are very familiar with. So if you have the funds, 30 to 40 bucks a month, that's a great one. And then, you know, finally, what you can do is analyze profitability by sector and industry. That's kind of the next level of it, is, you know, if you have a retail sector, if you have an e-commerce sector, if you have a direct sales channel versus a wholesale channel, you can also have a residential versus commercial. Another one is more business to business versus business to consumer. So there's a lot of different channels that you can analyze, and it's great to know what your profitability is by sector and or industry. And finally, I found a great quote as I was doing research for this, and I did not know who Tillman Fertitta is. Oh, Heidi, you plan to use QuickBooks. I just see that. Okay, so you're not on QuickBooks yet. Okay, got that. Hope you get onto QuickBooks soon, unless, of course, you're not yet in business. Okay, so I did not know who Tillman Fertitta was. I'm not sure if I'm even pronouncing his name properly, but he's a billionaire and he's a multi-billionaire. He has somewhere between $4 and $6 billion. So, but I thought this was really important, and I talk with my clients about this a lot. Don't ever let your business get ahead of the financial side of your business. Accounting, 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 know your numbers. And when I talk with my clients, that's what I say is we call it accounting because that's what it is at its simplest level. We're accounting for where we're at, and that's with numbers. So if you have any questions, please put them in the Skype chat as well. All right, now we'll move on to the next slide. Increase your customer retention. Even a small increase makes a big difference. Now this has sales in it, but increasing your customer retention by 5% can impact your sales by 25 to 95%. So, you know, it's an outsized impact to increase your customer retention. It's vital to focus on that. Existing customers spend more per order because they have a relationship with you. And sometimes, and this is really interesting, they're actually willing to pay more. When I work with my clients, we focus on customer retention, and because they know you and they trust you, they trust the relationship with you, they trust the relationship that you've built with them. They may even be willing to pay more for your service than a new customer. You may have to do less discounting. New customer acquisition costs more, so you get a lower rate of return on a new customer. Now, once they're a customer, you can retain them, right? So, you know, it's a great feedback loop, but increasing customer retention is really important. They can provide valuable feedback, cultivate them for feedback on how you're doing. You can send out a survey periodically. How do you like? We do that at the SBDC. We send out surveys. If you do your first appointment with us, you'll get a survey request. And then I think we do it at least once a year, maybe quarterly, I'm not sure. But we really appreciate your feedback. I look at the feedback. I think it's important. And then email marketing, be in communication with your customers. And I'm going to talk a little bit more of that in a future slide as well. Loyalty programs are great. So that's a way you can build, right? You go to your local coffee shop, buy 10 coffees or whatever, and then you get one free. So, and that ends up being about a 9% discount because it's not to your 11th purchase that you actually get the free coffee. So I think that customer retention is a vital way to increase your profit. And if you wanted to rate, so in the previous slide, I broke out, by sector, you could also break out your profit and loss by returning customer versus a new customer. You could actually take a look at that. And you would see that you make more profit on existing customers than new customers. Okay, any questions? Just looking at questions. All right, I'm just looking at seeing if I have anything more to say about this. Oh, here's the other thing, and I'm going to talk a little bit about this. Actually, it's in my next slide that just after one purchase, and this was with an online apparel retailer, an average shopper, if they had a good experience, was likely to refer 3 other people to the website. So you also, and that leads me right into my next slide, cultivating customer referrals. I cannot talk enough about this. And the one reason why I love this way of increasing your profit is because it really doesn't cost that much money. And I think it's really, really important. And the first one, and I'm going to talk about this a couple of different times. I'm a super, super huge fan of Google My Business. And if you don't know about Google My Business, well, actually, I'm going to ask a question. So how many people have a listing on Google My Business? I'd like to get that. And while you're, you can either raise your hand or you can put it into the chat. Okay, Jacqueline's not on Google My Business. All right, Jacqueline, this is for you. I'm putting a link into the Skype chat. If you're in business, that's your job today. All right, Heidi, you're not in business yet. Great. So if you're in business, I just put a link in the Skype chat and you want to go work on that today or this week. Don't delay it because then you'll forget about it. You know how we are as human beings. We forget things. We have good intentions and then we forget things. So if you're not going to do it today, put it in your calendar for later this week. Because see this over here, I'm gonna do the thing. I try not to do too much. You don't see the link. Oh, I see why. I was putting it in the wrong place. All right, I'm gonna do it again. Thank you, Jacqueline, for letting me know that. Okay, great. All right, so now I put it in the right, send it to the right. I sent it to a waiting room. Oops. All right, so this here, if I search, see, I searched for small business coaching. So I made it relevant to the SBDC, and I'm sorry, my screen is over here, my second screen, so I'm kind of looking at that now. So I searched for small business coaching, and look what came up. We had a super local business that came up, but then the Small Business Development Center came up. And what I really want to look at here is these reviews. These are referrals, these reviews. You have clients who are saying you're doing a great job. And look at us, we have 5 stars, right? And we've actually been working on this at our business, is cultivating these reviews. They make a difference, and they make a difference when people do searches like this, when they search for your business. And once you get a website set up, and I'm going to talk about that in a little bit, you want to link your website in. So if I clicked on this, you go to our website, right? So, if I clicked on this here, they could call me directly, right? We all use these things today, right? So I search for small business coaching, And now I could click on that link and get to our listing, and then I could call them directly. And actually Google My Business gives you all of those statistics. It's really amazing. So I find Google My Business to be very powerful. Okay. And then referrals, right? So depending on what business you're in, what your business model is, what sector of business you're in, there's a lot of other social media platforms. I only have a few listed here: Facebook, Amazon. If you're a contractor, Houzz, H-O-Z-Z, you know, there's a plethora of different, Instagram, right? There's just worlds and worlds and worlds of referrals, TripAdvisor. And it really is dependent on your industry. I think because of Google My Business being directly linked into the Google search engine, and let's be real, 90% of all searches are done on Google, it's by far the most important. Put referrals on your website. I think those are important. Don't make them anonymous. If you have a referral on your website, it's got to be a name. And if they're in a certain, and if you're doing business to business, it would be the name of the business. It would be the name of the person and the name of the business. If you're a business to consumer, it would just be the person's name. And, you know, don't be shy. Make it part of your business model. It's not a bad idea, right? If you're in the restaurant business, or if you're in the retail business and you give them a receipt, put on there, hey, we love your reviews, right? And put your primary platform of where you want those reviews to go. If you're in e-commerce, you can ask for the Google review on what you send out to them to confirm their order. So there's a lot of different ways. If you send invoices electronically, you can put and when you do your Google review, your Google listing, you can actually put don't send them to a generic Google review site, send them to your listing, and Google will give you that link. So you want to make it easy, and don't be shy about asking for reviews. People are happy to give you your reviews, right? They're happy to do that. And you know what? It keeps you kind of straight about really maintaining a high level of customer service, because you always want to have those 5 stars. I think out of 45, we have one person who gave us a 4-star. That's it. So, all right. Any questions? Any questions? Remember, questions, interaction is great. Okay, next up is maintaining a strong online presence. I think I've talked about Google My Business. One thing I want to add to that is that if you're just getting started in business and you don't have a lot of money to invest in a website, as part of your listing, you can get a free 1-page. It's very basic, but you can get a free 1-page listing. I hope most of you know what a domain name is. It's the website address. So like ours is nispdc.com. You can actually go out and purchase a domain name and then link it to that web page. So you can actually begin to build your presence online and get that initial website up and running. And there's a lot of different website builder platforms, Weebly, Wix, WordPress, Squarespace. There's many, many, many different ones. I highly recommend, as soon as you get into business, or ideally before you get into business, that you build a good website. And if you can afford it, I highly recommend that you go with a professional website. Unfortunately, even with the website builders and small business owners building their own websites, it just kind of looks like a non-professional built it. And I struggle with that. I struggle with that as a business coach, recommending that you go spend $1,000 pretty much out of your own pocket to go get a professionally developed website. But I think it really makes a difference, particularly if you're going to be in the e-commerce space. So if in e-commerce, a lot of people don't understand, it's not necessarily just selling product. If you're going to create a payment portal online, that's e-commerce. If you're going to allow people to make appointments with you, that is e-commerce. So anytime you're allowing people to interact with you directly online, maybe not if they're just signing up for your newsletter. I don't know if I'd call that e-commerce, but pretty much anything else I would view as e-commerce. And you want to make it super easy and professional when they work with you. Okay, just checking to see if I have any messages. All right. So maintaining that strong online presence, updating it regularly. It's got to be a part. If you can't afford to hire someone to really do things for you regularly. Oh, I just realized I forgot one here. Social marketing, Facebook, Instagram, worlds and worlds and worlds of social. But you only want to go to social where your target customer market is. Right? So if your target market's on Facebook and Instagram, you go there. If you're in the professional marketplace, it could be LinkedIn. So we tend to get a lot of following on LinkedIn because that's, we're business owners, right? But we're also on Facebook because that's where a lot of business owners are doing their own social marketing. So you want to look at where your target market is. So I have to update that slide the next time I do this. And then finally, email marketing. I mentioned a little bit earlier about customer retention. It's the way to stay in touch with your market. Now, for many of you, you'll start as you build up your customers, you'll start probably there in sending emails out to your customers and building that relationship and retaining them as customers. But also as you get hits on your website, you may have them sign up for a newsletter, or, a lot of small business owners are out there. They're at farmers markets. They may be at trade shows. There's just a world where you're interacting directly with the public. Create something, a giveaway, where they're going to give you their email address. That's a great way to build an e-marketing list. I can't tell you the value of that. Most of you probably ended up in this training because we send out regular emails, or maybe your coach sent you an email, invited you to come to this training today. So email marketing is very important. All right, another way to build your profit is increase your average order size. It's pretty much a direct increase to profit other than your cost of goods sold. They're already there, they're already buying from you. So the only thing you have to cover is whatever the cost is of that product. And that's pretty much it. You've already spent the overhead to get them to find you for the most part. So there's not a whole lot of overhead in having them increase their order size, and there's two primary ways to do it, which is you're upselling them. So you're taking them to the next level of product, or you're cross-selling. So you're saying, well, gee, you're buying this and this goes really good with this. So, right. So if you're buying a phone and you're in the store or you're online, well, you might want to protect that thing because that thing costs you anywhere from $300 to probably over $1,000 these days. And if you drop it or crash it, or drop it in water, or although a lot of them are waterproof these days. Anyway, there's a number of different ways, right? So that would be cross-selling. Upselling, an example of staying in the phone world is, well, don't you want the latest model? I think we're up to iPhone 13. Sorry, that's the only ones that I really know about. I have an iPhone. I don't know the latest Samsung or the other different the Android-based iPhones. So there's upselling to the next higher level model. If you're buying a car, there's cross-selling. Okay, you want to put protection on that, right? You can add services. So warranties are a great one. I love when I go to buy a garbage can and they want me to buy a warranty on that. It's so great. Oh, we'll extend the warranty for 2 years on a garbage can. Yeah, okay. It's just really interesting. And then there's other ways you can do it, right? With the minimum order amount. And with the minimum order amount, right? You can do that through shipping. That's a common one. You have to spend $50 and you get free shipping. I'll acknowledge I don't do it very often, but if I am crossing that free shipping point, I might go out and see if I can get free shipping, because for the same amount of money that I might spend on that other item, I'll get free shipping as long as I really need that item. You could give them a discount at a certain point, right? If they spend $100, you might give them a 5 or 10%. I wouldn't play too much with that because that does impact your profit. So, and as well as shipping does too. But so the minimum order amount, you got to be careful because you want to make sure that you're not giving away the profit you would make on that. And you want to focus on what that net income percentage is. So if your net income percentage is 10% of everything in your bit, right, it ends up being 10% of sales, and you give away 10%, you just gave away the profit on that order. So you want to be careful with that. The other thing that you can do, and it's amazing what people will increase that minimum order amount for it, you can give away a gift card, particularly if you're a local business and the majority of your business is local. Like a local coffee shop here, a lot of people go to Starbucks, but a local coffee shop, if you want to stay in the local universe, which I support, is you could give it to your local coffee shop. So here in Sandpoint, it would be Evans Brothers is a big one, or Kyoki Coffee. So you could do that, and it'd be amazing, $5, right? But you want to make sure that order size is big enough. So if I do $5 on $100 order, that is still 5%. So you just want to always be present to that if you give something away. All right, questions, just checking in. Any questions you can ask anytime. I'm covering a lot of stuff really quick here. And this is a lot of stuff. I could do a class on almost any one of these slides. So I am throwing a lot of stuff out. All right, let's see. Next up is, so now I'm going to talk about the more typical ways that we tend to think of as business owners to increase profit, right? We'll go to typically is to increase sales or increase prices. And I'm going to talk a little bit about, there is a time to increase prices, but not necessarily to increase your sales. You can decrease prices. I just spoke a little bit about that, right? If you have a minimum order size and you want to give away something, you can decrease prices at a certain point, or you can look at decreasing your overhead expenses. And these are all, they are all legitimate. There's nothing wrong with any of these. It's just, there's a whole nother universe that I just covered that is outside these more typical ways of thinking, right? So increasing your sales is a great way to increase your profits, as long as if you go to increase your sales. So like I was just working with one business owner, and they're in a business where they get paid by insurance companies, and they were going to take on a new insurer that would lower their net income, right? Their net income would be lower than what it would have been with the other insurers that they had gone with. And that was a red flag for me as a coach. I was like, okay, because they were focusing on the sales and they would still make some net income, but they would take an overall hit on their net income because it was a significant percentage lower. So they normally operate at a 10% net income. And with this insurer, they would only get 4 to 6%. That's pretty big, right? So, I was just like, okay, I got that. And then when I met with them the next time, that was where I started, because I kind of thought about it. And they had decided not to go with that insurer. So they really got the impact on their net income. It wasn't worth the increase to sales to take that hit on their net income. So you really have to watch that. If you're going to make a big effort to increase your sales, and say you operate somewhere between 5 and 10%, you want to keep an eye on that net profit. And then if it does take a hit, what's happening? Is it your cost of goods sold that's gone up? Maybe you've decided to, spend more money on marketing. Not a problem, but you just want to know what you're giving up to get that increase in sales. You can increase pricing. Now, I wouldn't increase pricing just to increase profits. I would increase pricing to maintain your profits. So right now, labor is high, right? And the supply chain is tight, so prices are going up. Yes, you increase profit. You increase prices to maintain your profit. That is when you increase prices. Unless maybe you didn't start pricing high enough because you wanted to get into the marketplace. Now you're in the marketplace. Now you're ready and you're known, you have a customer base. Then maybe you increase prices because maybe you did take a hit initially on your income to get into the marketplace, right? So there are ways that you look at increasing your prices. Decreasing prices, otherwise known as discount pricing. As I spoke in the last slide, you really got to be careful there. I would definitely use things. I would only decrease prices if you have found out maybe you started too high, or your target market can't afford it. But I would say in that circumstance, rather than decrease your prices, I would look at another target market. Because guess who gets paid last in the business? the business owner. So, and your money comes out of profits. It doesn't come out of cost of goods sold. It doesn't come out of overhead expenses. You get paid last. So if you're not making any money, if your net income is zero, or even worst case in the red, you're not getting paid. So you really want to be aware about that as a business owner, you're the last one to get paid. And if you're not clear for yourself, like, I forget, is it Luann who isn't in business? I'm going to kind of go up here. Heidi, you're not in business yet. Just so you know, I don't know if you registered, but we do have a class next week about starting a business in Idaho. And I'd highly recommend you go to that class, because we talk a lot about that the business owner gets paid last and what it takes to really start a business. A lot of people think they want to start a business because, one, they're going to make more money, and two, they get control over their schedule. Yeah, you might end up making more money eventually, but there's a lot of work in getting to the place where you make more money, a lot of work. So anyway, anybody who hasn't started yet in business, I highly recommend that you attend our class. And at the end of this, I'll put our website in where you can go and register. And then finally, you can decrease your overhead expenses. Overhead is something that you pay no matter what, right? So that's your marketing costs, your labor costs, your rental fees, interest you're paying on debt, your phone, right? There's a whole world of expenses that you incur no matter what your sales are. If you're on a website platform, you're going to pay those expenses. That's overhead. So they're impactful, right? So if all of a sudden you have a decrease in sales, you may have to look at your overhead expenses and decrease spending money on something, where your cost of goods sold floats with your sales, right? As your sales go up, your cost of goods go up. As your sales go down, your cost of goods go down. But overhead expenses are kind of fixed costs. That's another name for them. So you could decrease your overhead expenses. So these are the more typical ways to increase profits. Any questions? Okay. All right. So now so I just talked about all the 6 different things that you can do to increase your profit. Now I'm going to talk a little bit about how you might measure, right? So, I'm going to talk about return on investment, otherwise known as ROI, because some of those things that you could do, you want to measure if they're impactful. Not everything you can do. So if you go out and get customer referrals, you can kind of measure that, but it's not really going to cost you money, hopefully, unless you're doing ads or something. But that's really marketing, right? So I wanted to talk a little bit about measuring the impact of some of these things, right? Because some of these things will cost you money. And if they cost you money, you want to measure whether or not they're actually making you money, right? So how do you do that? You measure the return on investment. And so what does that actually look like? So a return on investment is the cost of the investment. So how much are you putting in? So for example, you invest $1,000 in a website. And then what's the return on that investment, right? So then you get $1,500 back on that investment, and then you multiply that, right? So if I invest $1,000 and I get a return of $1,500, that's a return of 66%. Okay. So, and then I just gave some examples here of where you might look at measuring, creating some kind of measure for the ROI. Now, I made that sound really simple. Okay. I want to point to, it's not actually simple to measure ROI, because you have to look in your business for what are you going to measure, right? And you have to be specific. So in the world of a website, right, if you're going to measure ROI on that, say for example, you have a retail location, or you sell, however your sales come to you, they don't come through your website currently, but you're going to create something where you're going to know if someone found you through the website, and then you're going to track that sale. Okay, how do you do that, right? So it takes something to actually measure that improvement on your sales somehow, so you can actually see what the impact of that was. So while the formula is simple, actually tracking how you measure, it takes a little something. And that's where the financials come back. Because if you're not really tracking your costs and your sales by sector, website versus in person, retail, you're going to have a hard time getting to an ROI. So this may be a little bit of a more mature way, but I wanted to talk a little bit about that because it is important. You know, another simpler one is, say you hire someone to do your social media for you, right? You know how much you're investing in them. You set goals up, if a client's finding you through social media, you should be able to have a sense of that depending on your analytics. You can set things up for that. If you increase your order size, right, you can see how many orders come in at that size. And if they've increased your sales, right, you can set that up so you can track that. Oh, I've increased, I used to get orders at $75. I got 100 of those a month. Now I get, I've shifted that from 75 to 100 and it's gone up by 10. And you can look at the cost of that because you gave them free shipping on those 10 orders or you gave them a pricing discount. So you can actually calculate that. Okay. And then I just brought in some more other investments that aren't as directly tied to profit. But I just wanted to point out that you can track your investment on technology, or if you get a piece of equipment in. It's just really important to do that. And the other thing is over what period of time, right? We tend to forget the time aspect of things. So if you invest $1,000 in a website, over what period of time are you going to expect that return? It's not going to be in 1 month. It may not be in 6 months. It could be in a year, right? So it's over time and what that time is. And in marketing, it can be a little bit shorter. Increasing order size can be a little bit shorter. But for investments, that tends to be a larger investment. So particularly for capital equipment, it could be 5 years, it could be 10 years, right? But it's really important to take a look at that and look at what your goal is. What's my goal for return on investment? And typically for small businesses, you want to look at least 15 to 30%, because it's a risk for you to spend that money. And you want to make sure that you do that. Okay, now, finally, where do you get started, right? How do you know what to pick? First one for me, and I kind of hinted at this in the beginning, that's the most important: get your financial house in order. Know your numbers. From the quote, know your numbers. Know whether or not you're making money. If and there's a lot of business owners that operate this way. It's common to start out this way. You save your expenses, you take it to your account at the beginning of the following year, and then probably sometime in March or April, you know whether or not you made money. I highly, highly recommend, particularly if that's where you're at, get accounting going. Get accounting going at least quarterly, if not monthly. At least quarterly, know where you stand financially. Spreadsheets work if you don't have a lot of expenses. If you have a relatively simple business model, start with a spreadsheet. It's a good place to start. And then if you're going to go bigger than that, referrals are pretty easy. Google My Business, that's an easy one to start with. I should have put that one here, I didn't. But you can choose what to implement based on what ROI you think you can get, and then implement and measure, right? So coming up to the end here, like your last time for questions. So if you have any questions, comments, I'd be happy to answer them. You can unmute yourself. You can put it in the Skype chat. Now, if you want to, and I mentioned in the beginning, we have business coaching. So, and this is my last slide. I'm now going to pick up our website and put that into the chat, where you can both sign up for future classes. Like if you're starting a business, you can get out to our training there, or you can apply now and request an appointment. So that's now in the chat. And I want to thank you all for being here today. And if you want to hang out, we have a few minutes. You can hang out. If you want to ask questions one-on-one, I'll be here for a few more minutes. Or if you want to put something in the Skype chat. I really appreciate you being here. I know that your time and attention is valuable to you. Thank you.